Why hasn't the stock market crashed yet? Have you ever stopped and really asked yourself that question? Because when you look at the numbers, when you look at the history, when you look at the way things usually work, the market today should have already collapsed into pieces. Yet it hasn't. In fact, it keeps climbing higher, breaking records and leaving everyone scratching their heads. And the truth is, there are reasons for this. Reasons that most people don't know about. And reasons that the banks and institutions would rather you didn't understand. Because once you do, you will see the game clearly. You will see why the system is still holding together, and why it feels like something bigger is being hidden in plain sight. And stay until the end to see when it will crash. Leave a like and let's start. Now let's start with something very simple. Numbers don't lie. If you take Warren Buffett's favourite measure for valuing the market, which is the total value of all the companies, compared to the size of the economy, the result today is completely insane. The total market cap is around $66 trillion. The GDP of the United States is around $30 trillion. Divide 66 by 30 and you get over 216%. Now here's the key. Anything above 100% means the market is overvalued. Back in 1999, before the dot-com bubble burst, the number was 115%, and after that the market collapsed by more than 60%. But today, it isn't 115%. It isn't 150%. It's over 216%. If you only looked at that, you would think the market should already be in ruins. And yet, here we are. Even if you look at the top companies in the S&P 500, the biggest, the ones that drive most of the market's growth, you will see something even more shocking. Their average price-to-earnings ratio is around 66. To put that in perspective, normal, healthy companies usually trade at 15 or 20. Tech companies sometimes trade higher, maybe 25, maybe 30. But 66 is absurd. That means investors are paying $66 for every $1 of earnings. It's like paying $66 for a burger that should cost just $1. It makes no sense. And yet people keep buying. So the obvious question is this: if valuations are off the charts, if history tells us crashes happen when numbers get this high, if even Warren Buffett himself is sitting on cash instead of buying stocks, then why has the crash not arrived? Why does the market keep climbing? The answer is not simple, but once you understand it, everything falls into place. Here's where the mystery begins. Think about cycles. The market moves in waves. At first, investors are excited, money flows in, prices rise. Then smart money realizes prices are too high, they sell, panic spreads, and a crash follows. Then new investors step in at the bottom. They buy, and the cycle repeats. This has happened again and again throughout history. But now the pattern seems broken. The market is at a peak, but the big players aren't dumping everything. They're still in the game. And that tells us something powerful is happening underneath. One of the biggest reasons is government spending. The US government is not just a participant in the economy, it is the single biggest spender. Every year, it collects around $5 trillion in taxes, and then it spends that money on Social Security, on Medicare, on the military, on paying interest on debt. That money doesn't disappear, it ends up in people's hands. And what do people do when they have money? They spend it. They buy iPhones. They eat at restaurants. They fill their cars with gas. And where does all that money go? Straight back into the pockets of the biggest corporations, the same corporations that dominate the stock market. But it doesn't stop there, because the government isn't just spending the $5 trillion it collects. It is also overspending by at least $2 trillion more, borrowing from the future to keep today's machine running. That borrowed money again flows through the system, into people's hands, into corporations' earnings, and back into the market. So the real question isn't why the market hasn't crashed, but why the government is overspending by such a massive amount. To answer that, you have to understand the bigger picture. Since 1945, the US created and controlled the world order. It was the industrial leader, the technological leader, the financial leader. If you wanted protection, you played by US rules. If you wanted access to the global financial system, you played by US rules. If you wanted the best products, you played by US rules. For decades, there was no serious challenger. But today, that is changing. Countries like China, India, and others are rising. They are building their own systems, their own militaries, their own technologies. They are saying they don't want to depend on the US system anymore. And that shift threatens America's position at the top. So the US has made a strategic choice: spend. Spend as much as necessary, even if it means borrowing from the future, even if it means running massive deficits. Because the priority is to protect its dominance in this new world order that is forming. The government believes that by overspending now, by pushing trillions into the system, it can stay on top until the dust settles. Now here's the part banks don't want you to fully understand. When the government does this, when it floods the system with borrowed money, it creates devaluation. Think of it this way. If there were only $10 in an economy, those dollars would be very valuable. If suddenly there are $20, each one is worth less. That's inflation. That's devaluation. And that's exactly what is happening with the US dollar. And this is why the stock market hasn't crashed. Because investors aren't just betting on companies' productivity. They are betting on the dollar losing value. They know that as the dollar weakens, companies will raise prices. Earnings will rise, not necessarily because companies are producing more, but because prices are higher. And that in turn makes today's insane valuations look justified in the future. Think about it. If a company sells a product for $100 today and earns $10 profit, its earnings are $10. But if inflation pushes that product's price to $200, suddenly earnings double to $20, even if nothing else changed. That's the hidden engine keeping the stock market alive. It's not pure growth. It's not pure innovation. It's a quiet, ongoing bet on inflation and devaluation. But this creates another huge problem: wealth inequality. Because who owns the majority of the stock market? The top 10%. The bottom 90% of Americans own almost nothing in comparison. So as the dollar loses value, as stocks climb higher, the rich get richer. They don't feel the pain. But the bottom 90%, the people without significant investments, they fall behind. Their wages don't rise at the same pace. Their groceries, their rent, their gas, all become more expensive. And the wealth gap stretches wider and wider. This is what banks and institutions don't want you to see clearly. They don't want you to notice that the market's rise is built on a foundation of devalued dollars and inequality. They want you to keep believing that everything is normal, that growth is real, that nothing is wrong. But the truth is, the system is being artificially held together. And sooner or later, reality will break through. Some of the smartest investors know this. Warren Buffett, for example, is sitting on massive amounts of cash. He knows this game can't last forever. He knows that when the correction comes, it will be brutal. And he is preparing to use that moment to buy assets at a discount, just like he has done before. He is patient because he knows cycles always come back around. So where does that leave you? You can't afford to sit on the sidelines and hope for the best. If you do nothing, your money will simply lose value as the dollar continues to devalue. If you act wisely, if you invest in the right assets, you can protect yourself and even grow your wealth in this strange environment. But there is no middle ground. Doing nothing is the same as choosing to lose. This is the hidden truth about why the stock market hasn't crashed yet. It is being propped up by government overspending, by borrowed money, by the deliberate devaluation of the dollar, and by the actions of the wealthiest investors who are playing a long game most people don't even see. It's a system that works for now, but it's unsustainable. The question is not if the crash will come, but when. And when it does, the ones who prepared will be ready. The ones who didn't will pay the price. That's why it's critical to see the system for what it is, to stop believing the illusion that everything is normal, and to make decisions now that protect your future. Because the banks and institutions may not want you to know this, but you do now, and the choice is in your hands. Let me know your thoughts in the comments, subscribe to stay always updated, and I'll see you soon. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.